Hi friends, you have tuned in for AMC and GME technical analysis. You want to know where the resistance, the support is, where the profit taking is going to be happening with the institutions, and where you can then hold on to get better discounts on entries, and of course what we might see coming up in the near future. That's what I'm back here to tell you all about, starting off with GME, and then we'll do a similar thing on AMC after. Thanks for tuning in. My name's Rocky Outcrop. I do this all the time. I would appreciate a like and a subscribe and all that stuff. Share it with a friend. A friend of yours is a friend of ours. So here we are back in the charts, and I'm actually going to put myself onto the screen in the bottom right. Hey, hello, here I am, and thanks for joining me. And this is the charts that we are looking at. This is a GME chart. I've got it in the 5-minute time frame, and I just pointed out a few key things for us to know. On the way down here, we were up recently at 250 bucks the other day. Remember, we came on down, and there was a bit of a liquidity swap that happened in here at around about a level that we're aware of on the charts, and around about that 213 price point for us. And we can see that there was a big wick up and a big wick down. The prices were going along here sideways, up and down, and then sideways again. And we know that during this period of time that there were some bigger players positioning themselves. And what were they positioning themselves for? Well, actually for a test down here to the 196 area, and that's what we've been living through with today. Actually 199, just below $200. I aimed a little bit low on my yellow line just there. So the question for us is, where is resistance? Up above. Bearing in mind that, of course, when we broke down past this area where there was this liquidity swap, we were actually breaking down past support. In doing so, the first answer to that question then obviously comes in at that what was support is now resistance, and we can see that that is lining up with a nice flash for us. A couple of targets then therefore on the charts right here right now. You've got $212 up above. I do think that the prices will be going there at some point in the next day or so, and then we have other targets up above. Now, will we ever meet those other targets? And that actually comes into play with whether or not we see a nice push up past this area. If we do, then quite possibly we will meet those higher targets. So this area right here is the one in question. It's a little bit beyond the area of the Rocky Outcrop flash. It's in around about the $213-14 area rather than the 212.5. Why is that? Well, a 1.13 Fibonacci retracement from the flash itself down to the lows brings us right in here at this region where there's the two green lines right there, and those two green lines are the 618 Fibonacci point between the high when that liquidity swap occurred and the most recent low. So that is absolutely where the algos and all the rest of it in the institutions and the high frequency traders will be aiming for taking profits. No, I'm not muted. It's all good. Yeah, good. Anyway, by the way, sometimes that happens here. I've got a guy beside me as I'm making this episode called Trade Spotting. He's brilliant at TA as well. You should check out his channel, youtube.com/c/tradespotting. He's my brother and I love him very much. He was just saying, are you muted? The woes and joys of being a YouTuber, hey? So, yeah, the next target, you know, hit that 1.13 after flash here. If the next target's hit, where could we be going to? And looking at this from the broader perspective, from this high, which is the 250 high that we started off talking about, down to this low, then if you draw in a Fibonacci retracement area, we're looking up to a target of the 618 in here at 232 bucks. 232 would be the next one after 213. That is, of course, the sort of the $15 to $20 range that can happen if we are just to kind of push higher and put in what would ultimately then be a lower high. What if we were to push a bit beyond that? Where could you be looking for? And well, the next big target for us after that is actually 241, that lovely number. 2 for 1. Now, 2 for 1 is like a great number when things go to 482, right? Because you got them at 2 for 1. right? So that's one of the things, but also it's actually a funny number here for us. That is a target that we should be aware of, with the 1618 Fibonacci retracement point coming in just there. So I'm using a lot of Fibonacci to be able to make these points, but we're actually, this is based off the back of just simple trend analysis. You know, so far we've been trending down, and all of these targets up above are retracements against said trend towards the downside, and that is all done, like I said at the start of this, on the 5-minute time frame. So let me just put this into a bigger context for you and draw us out a chart on the 24-hour time frame instead. Okay, so here's the daily time frame, and you can see all of this stuff that I had drawn in here on the right is now, you know, covering up the charts quite a bit. And let's go on in and see what it is. Now this big zone here is another kind of liquidity zone on the bigger time frames for us that has its own range identified with it, and we actually could see us coming back down to visit targets like 171. I actually do have 171 as a target of my own on this stock right here. Now I actually, last time I bought it was at 170, so you know, it's a bit of a sting in the old foot there, or a thorn in the side, to not ever be actually trading this, because I'm diamond handing it. Now actually, me personally, I'm a professional trader, and I trade professionally, and I do that on everything. This is the only stock, this and AMC actually, that I hold. You just to hold, you know. So my portfolio in that sense is very narrow. This is diamond handing type philosophy. I actually trade everything with a massively, you know, with gusto. Right, anyway, so here we are, 171. This would be where I'd be aiming down to next. So I'm able to form these professional entries and exits even though I'm diamond handing, off the back of me being a professional trader. Check out my YouTube channel. There's over 2,000 videos on the thing, and I've been doing live shows every day for what's it now, a year and a half or so. Right, anyway, I've had the YouTube channel since January 2020. Right, great. So all these things covering up what we're looking at over here in terms of if we were to see drops down, etc, 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 and all the lines I just drew in, all of that represents those yellow bits there, right? Okay, so what I'll just do actually is I'll just delete all of them so you can see. So there's actually a couple of things to point out right here. Now we've come up slightly higher than before, but there's a question mark right here, because actually, you know, what's that? Well, that's a wick, and this is an upward trend, but that's a wick. We're going to just check in on the oscillators. So while we put in a higher high in terms of body closes, we didn't actually put in a higher high in terms of like where the prices went to. Now over here we did push higher as well in this period of time, but this could easily form out, you know, a wedge, or indeed it could break down past this point here. That's just pointing out that this is not bearishly divergent, but it's not bearishly divergent almost based off the back of a technicality. Drawn in the 4-hour time frame, you see that wick persists. Drawn down on the 1-hour time frame, you see that that wick and the highs persist, and we're also but we're starting to get hints of where we could maybe have bearish divergence. 30-minute time frame, then we see that we actually, let's work this one out while we're doing it. It persists again here, and we're not divergent. So, you know, there's this kind of strength that's in the market, but it's really kind of, you know, hamstrung in terms of its analysis by this point just over here. And how is that affecting the oscillators down below? And if I just show you in terms of the stochastics, you know, there's no question about how far we are in terms of the movement. We're right at the neutral line. This is an area where the prices typically can reverse. There is divergence on the DMI. There actually is divergence on the stochastics between these 2 points here, and there is divergence on the MACD. And while, you know, actually on this time frame there isn't on the RSI, and the RSI is giving us that picture constantly that there's not divergence because of this dynamic with the wick and the way that these things are calculated. Well, actually, lo and behold, there is divergence there, and that's led into this downward play, which has got us to this liquidity zone, and this presents us as a pivot point. So really, what I'm really trying to say is that if you look here over this whole period of time and you consider this price point of 196 or so, that's the pivot, and the pivot down from there could take us to lower targets. So if we hit 196, you know, that's a discount. Sure, it is, just like $200 here is a discount versus 222, 232, 242, 250, 400, 500, thousands, 100 million discounts compared to all those numbers. It's more expensive than 170 or 180, or where we could head if we break 196. And there's that volatility volatility that could exist in there, and those would all be much higher risk moves to be getting in at that point than if you're just looking to try and get the best value play over the period of the next month. Then, you know, that's how you're looking at that. Okay, so that'll do on GME, right? In terms of the short term, how am I feeling? Fairly bullish in terms of the move to 212. If we get follow through from that, bullish on moves to 232 and 241. But if we actually pull back from that 213 price point and don't push any higher and come back down to where we are now, then continuation past 196 is a dreadful problem that leads to 171, and you getting a big discount on your GME. That's the technical analysis for you, and be sure if you want to see that in detail at any time to tune in for a live show. By the way, nobody asked me to take a look at this today or yesterday, or I don't think really any time for the last couple of weeks anybody's asked for, which is a big surprise given the market sentiment over here. Now looking over here, AMC, I mean, know if I go over to something like Twitter and I just like search, you know, AMC or whatever here, that there'll be how many millions of tweets in the last, however many, 1,500 tweets in the last hour. So you're talking about stock here, which is extremely well looked at. Hey, look at that, it's a friendly guy. Subscribe to his channel, see if you're watching this video right now, and that is this video. Do what I just did and hit the like button, will you? That'd be appreciated. So over here on AMC, right, there's this there's a huge amount of sentiment. Nobody's been asking me to take a look at it, ladies and gents, so if you do want that more during the live shows, be sure to vocalize those opinions, because otherwise it might not get looked at so much. Right, we've got a target down below that we are aiming towards still, and that's 34.68. Sadly, in terms of the prices, you know, that is of course below 36. 36 is a pivot in the markets, and we've seen that operate as support for us twice today, not twice today, yeah, twice today, sorry, so far in here. Can we see this rounding out, give us a little bottom here and a nice move up? Yes, we can. Let's take a look and see if there's any areas up above where we might find us actually simply having a downward trend and having retracements against the downward trend, with the potential of us coming in for 34 before we actually find a bounce that takes us up and higher than our previous highs would have been, because a trend is identified by having lows followed by lower lows if you're in a downtrend, as what we're looking at here, combined with highs which are lower highs along the way, as we've got here. And that is of course clearly and in not disputable that is downward trending price action right there, and that is obviously an issue. When you seek continuation as you follow the trend being your friend until the end of the trend when it bends, then you're obviously looking at least until 34.62 if that's what you're looking for. Now 34.62 actually is, you know, a great big pivot point for us, because this 36 pivot point is actually a zone in here really for us. Taking out that taking out 33 really, sorry I should say, is the taking out movements down beyond this are a problem. In the last show, the last bit, the GME bit, what I did there was I did a Fibonacci retracement, and I measured from the point at which I've got my proprietary indicator. You can buy this on Patreon, HTTPS Patreon. It's $100 per month to get access to it. If I draw in a Fibonacci retracement from the low here up to the high, and this is something that we're developing here, I'm not 100% sure that this is the very best way of doing what I'm doing right now, but this is because we're inventing this now live together as a community, as opposed to, you know, reading textbooks and trying to interpret data. This is for reals, and what we see is the 113 has been a pivot point for us, and actually it already drawn in as well this line, the C line, you know, to kind of highlight that at the C point, the highlight in this orange line here to highlight that in terms of if we do crack down past this level, then further continuation would be in store. We would then say on our harmonic pattern, and we would give up on the analysis that I'd done, you know, a month or so ago, with the target up towards $67 followed by 87. That would be how that would go, and that's why this then represents what we could call a decent inflection point in the market, a significant zone of support for us. And of course, when flipped, if broken, it would be resistance thereafter. And that is why when we go back over and check that, of course, we had this nice little bit of a formation of a head and shoulders or whatever it was that's back in here at this pivot point previously, because this is a significant zone for us. Again, as well, on the run up, we also had this. So this is a very significant zone for us, and this is the realities of where we are right now. So on that front, then going into the smaller time frame, and on GME, what I did was I stayed on the 5 minute time frame for the most of it, then went to the broader picture to show you a broader bit of analysis. On this one, I'm just going to do the whole thing on the half an hour, and I think that's probably fine for us. Right now, it's a lot cleaner chart when I've got rid of all my drawings. You can see though there's a lot of significance to my drawings, so what I'm going to do here is just chuck them all in the bin, and then I'll undo that afterwards. But when people who think, oh, your charts are messy, it's like, sure, I know that, but there's value in that there. Now, in this downward movement where we are just now, this is kind of trying to connect up a few of these lows and saying, well, you know, have we done enough just yet from here to say that we've found a bounce? And potentially in this area we could have. So from a basic sort of support resistance play between two diagonal trend lines, looking up towards that area would represent your next target, and that comes in at $40, right? And that's not a shock to see that that's at $40, and this is a round number and a significant area in the past where we've had resistance, no less, as demonstrated by where this gap happened at in the past over there. So that would be your starting point in that front. Now watch out closely, all of you AMC YouTubers out there that like to watch my content and then not leave a comment down below, you cheeky sods. Leave us a comment sometime, Matt and Trey. Come on, leave us one, say hi, I'd like to chat. Anyway, down here you can see that when we're looking at this, the 236 lines up perfectly as well with where we've had the resistance and the support, or the confirmation, I'd like to say, I suppose, of this little gap that we'd had before, creating this island in the price where we are right now. How about we kind of stop being islands in the stream with nothing in between and all that, you know, Kenny Rogers, Dolly Parton, and actually, you know, whenever we get past this point and there's no longer an island, then we can start to be positive about this move up towards the $40. It's still a nice tradable move. And you can remember, if you look at my video about the most consistent way to trade profitably, which maybe if I can remember, I'll link in here. It's a 1 minute 20-second video, simply says that you trade between levels is taking chunks of the price action as opposed to necessarily the entire move. And that would be one way that you might want to think about that. But would there be the potential for resistance into this zone? And of course, you know, there will be, because it's the price fill of it's the gap fill territory there for us now. This actually, yeah, it does remain slightly on there, and the 236 is just there. That's like a nice little bit of analysis. But we were asking the question before, you know, is there anything here at this area where we actually, if I hide the drawings real quick again, you can see that this low here actually did close ever so slightly lower than our previous low. Then are we looking and saying that there's the bullish divergence as well? We did a big chat just a minute ago in the GME section about what the significance of this wick could be with regards to GME on the top side and the movements in the upward trend with regards to divergence and the disparity between it on the RSI and the stochastics. Again, like, this is advanced level stuff that's not going to be in that course that we're selling, by the way. That's just advanced level stuff, but that's what people tune in for here, and it's reinforced quite a lot on the daily. So here we have it, you know, bullish divergence on the RSI, bullish divergence on El MACD. There's Ronald McDonald as happy as can be. And then we have, of course, the bullish divergence, I suppose you could say, between these last two lows on the stochastics, if you're including sort of this territory here. In terms of just like right here, the stochastics are not showing us that. In terms of right here, just on the last two lows, just the last two, just here, it's like you're scraping away from that divergence. Instead, it's a question of, do we have it across the broader picture? So really, that 30-minute is better compared perhaps on a 4-hour time frame or something like that, where if we bring it up, we can see that this is actually just kind of convergent and negative, right? So the momentum isn't there. Momentum obviously can flip around before the actual prices do themselves on the small term time frame. Yeah, there's hints where we could get this thing, but this would give us a move, potentially just a move to 38 from where we are right now. That's not a bad move, and the move on the day overall is not so bad either. 36, 46 to 38 would be a nice move to do if you were spending 4 hours trading in the morning up until lunchtime, making your profits, closing your account, and taking your wife out for lunch. That wouldn't be so bad a way to spend the day, and that's of course what a lot of people would have been looking at. Now, we've not made it there quite yet. Can we finish out the day there and hopefully leave us with a bit of momentum on the table for tomorrow to push on up the way and carry that on? Who knows? If we do, 40 is the target towards the top side. We clearly know that the pivot is going to be where we had our last two lows. Like, you know, if we just bring up the RSI to demonstrate that point rather than price action, given I've drawn on it so many times, this here forms what is essentially a horizontal level. Now, we also spoke about this on other time frames as well, or whatever, as well in the past. You've got this kind of trend line, and we're just flirting with the idea of breaking outside of it. This was a change in conditions into the positive aspect of things on the 4-hour time frame, and ultimately we would like to defend the bullish control zone, which is this, or the bearish control zone, and not see the prices change in conditions in the market sentiment for where we are. What does that boil down to? I understand that newbies out there, and of course people who've been doing you know, Matt and all the rest of it might be struggling to follow along. But for everybody who's an outcroptician out there, you do understand this, right? We've talked about this an awful lot of times. You really truly do. What it means is that this significant area is a significant pivot point, even on the small term time frames. At the most recent low, if we were to push past that price wise, etc., we're going to monitor the situation and see if conditions have changed. We're going to look at those price points that I was pointed out down below with the 34 and the 33. If we do actually go down as far as that, if we bounce from here, which we really could do on the short term time frame, it would be fulfilling the promise of a bearish a bullish looking rising wedge, but it's only got 2 touches towards the lower side of it of any real significance. Are we looking at this and saying that within these movements, that any movement towards this zone followed with a retracement that would come back down to the 34 price point would be the area where you would have at last the confluence of pattern, the confluence of a significant horizontal support and resistance, the confluence of all of the support and resistance along the way up here towards these higher price points, the confluence of the rocky outcrop flash, the confluence of the harmonic pattern, the confluence of just standard Fibonacci retracement tool techniques, the confluence of the bearish and bullish control zones on the RSI, the confluence of the fulfillment of the bullish divergences, etc. All in at that point. Would that be the point to buy at? Would that be the point to buy at? Would that be the point to buy it at? I'll leave that question with you. Like I say now, my name's Rocky Outcrop and I do these shows live on the daily. Now this video you're watching right now actually is filmed during a live show, and here are some of my and your compatriots out there. Say hello to them all. Thanks so much for tuning in today. Apple, TradeSpot, and Brady Pearl, the Ghost of Dead Money, Merrick Sanders, the Shadow of Lepton. All you people support me all the time, every day, and I really do appreciate every single last individual of you. I genuinely mean that. Every single person in here, the Shadow of Lepton, Ghost of Dead Money, you've got your space monkeys, you've got your Bad Mama Jamas. Man, Bad Mama Jama, it's so good to see you as ever. You've got your Observe Thyself. Rocky, you're almost at 2 hours of this live stream. It's time for me to tune out. If you've liked anything that you've seen here, share it among your AMC and GME friends and bring them in and introduce them to a world of financial independence, resilience as trading, and self-reliance. My name's Rocky Outcrop. Hit that like button on your way out. Thanks for tuning in for today, for this live show and this GME AMC clip. That's it from me. I'm tuning out. And we'll hodl on and make the bears go long. Yeah, we'll hodl on and make the bears go long. Yeah, we'll hodl on and we'll make the bears go long and we'll hodl on behind.